students, welcome back to Accounting 1304, Introduction to Accounting 2. This is Dr. Mercado speaking. I hope all of you are doing well and having a great week thus far. In this particular lecture, we are going to continue covering Chapter 19, which deals for accounting for partnerships. Please make sure that you have read the chapter before you attempt any of your homework assignments. And if you have any questions or concerns as you're working your problems, please feel free to contact me Monday through Friday, and I will be more than glad to assist you. Just make sure that you do include the problem that you're working on and your attempt solution so I can see what you're doing. Okay? I do want to see your step-by-step calculations. That way I can grasp where is it that you're doing right, what is it that you're doing wrong, and I can be able to correct you, provide guidance, and we can hopefully resolve any issues that you might have. Now in this particular lecture, I am going to be going over problem 19-10. Okay, this is another long problem. It's a little bit challenging. That's why I decided to go over it with you as well. This problem deals with the statement of partnership liquidation with a loss. Okay, so we're liquidating a partnership and we have a loss involved in the liquidation process. So it says, after several years of operations, the partnership of Nelson, Pope, and Williams is to be liquidated. After making closing entries on March the 31st, the following accounts remain open. Okay, so we have cash with $15,000, inventory $40,000, other assets of $220,000, liabilities of $75,000, CDW Nelson Capital $40,000, J.R. Pope Capital $60,000, and M.L. Williams Capital $100,000. So it says here that the non-cash assets are sold for $230,000. The non-cash assets include your inventory and your other assets. Okay. It says profits and losses are shared equally. Okay. We are required to prepare a statement of partnership liquidation for the period of April 1st through the 15th, showing the following. Okay. We have to show the sale of the non-cash assets on April the 1st, the allocation of any gain or loss to the partners on April 1st, the payment of the liabilities on April 12th, and the distribution of cash to partners on April 15th. Okay, so I've created this Excel template here. We have the name of the business here. We have Nelson, Pope, and Williams, and this is the statement of partnership liquidation for the period of April 1st through the 15th. Okay, so what I have here set up is each of the accounts that we have open as of this period. Okay, we've got cash, inventory, other assets, liabilities, and then we have our three capital accounts. Okay, this is the layout we're going to follow, and then of course we're going to address these requirements down here. Okay, before we begin addressing the first item, which is the sale of the non-cash assets on April the 1st, we're going to go ahead and start off with our beginning balances. Okay, so I'm just going to bring in each of the balances that we have here. So for example, cash has $15,000. Let me put commas here, that way it just makes it cleaner for me. Okay, so cash is $15,000, inventory is $40,000, other assets it's $220,000. Okay, liabilities $75,000. The capital for Nelson is $40,000. 40, 1, 2, 3. The capital for Pope is $60,000, and the capital for Williams is $100,000. Okay, so that is my beginning balances, and all I did was just copy the information provided in your problem over here. Okay. Now, the first requirement is we're going to record the sale of the non-cash asset on April 1st. So we're selling our non-cash assets. So when we sell something, what do we obtain? Okay, when we sell something, we get cash in return. So I'm selling my inventory and all of my assets to different companies or whoever, and they're paying me cash. Okay, so how much cash did I receive? Well, I received $230,000 in cash. Okay, I'm going to put that under my cash because my cash increased by $230,000 because I sold my assets. Now I have money. Okay, now what happened? Well, I sold my assets. So what's going to happen to your inventory account? Well, you sold it. So you're going to deduct the $40,000. You're going to close it out. And you sold your other assets for $220,000. Okay? So these are minus because these are the two items that you sold. So you're closing these two accounts out. So I'm closing those two accounts out. Okay? Now, does this balance? Okay? Let's see what happens. Did we sell them for enough? Or did we sell them for more? Or did we sell them for less? Well, our inventory was $40,000. Our other assets were $220,000. So that means that we had our assets in our books for $260,000. Okay, so these assets were in our books for $260,000. So remember that number, 260. Okay, so we received $230,000 in cash. And I'm going to subtract how much I had these items in my books for. That was 260. So that means I have a loss of $30,000. I sold them for less than what we had them in our books. So I have a loss, okay? A loss of 30, okay? So it says profits and losses are shared equally, okay? So because I have a loss of 30,000, I'm going to split that loss into my three partners, okay? So I'm going to divide that by 3. So that means that each partner is going to get distributed a loss of $10,000, okay? So I'm going to put here minus 10,000 for each partner because we're distributing that $30,000 loss between the 3 partners equally, as stated on the problem, okay? Shared equally, okay? So now we should be in balance, you see? So we've got our $230,000 that we have in cash, and then let's see these. So we cleared out our asset, which was $220,000. We cleared out our inventory, that's gone. We obtained $230,000 in cash for those 2 items, which represented we had a loss of $30,000, and that loss was split amongst the 3 partners, okay? So my balance after the sale. So we're going to calculate our balance as of this point in time, okay? So I'm going to go ahead and I'm going to get my cash plus the $230,000 that I received, okay? That gives me $245,000, okay? I started off with $40,000 in inventory. I sold it, okay? I sold that inventory. I've got 0. I started with $220 in other assets. I sold those assets. Now I have 0. So those 2 accounts have been zeroed out. My liabilities, there was no adjustments made. Okay, so I just bring that number down. Okay, for Nelson's capital, I had 40,000 beginning capital, and then we have a loss of 10,000. That leaves me a balance of 30. For Pope, I had 60,000 in capital. I distributed a loss of 10,000. Now he has 50,000. And for Williams had 100,000. We distributed a loss of 10,000. That leaves William with $90,000. Okay. So this is the balance as of this point in time, okay? Let me put this in a little color right there, okay. Now that takes care of the sale of the non-cash assets. I've sold them. That takes care of requirement A, okay? I'm going to put here a little A, okay? Now requirement B, the allocation of any gain or loss to the partners on April the 1st, the allocation has been done. So this is A and B, okay? Because we allocated the loss right there to the 3 partners, okay? Now C, the payment of the liabilities on April the 12th. So we are paying our liabilities. When we pay something, how do we pay? We usually pay with cash. So if we're making a payment to people that we owe money to, what's going to happen to our cash? Our cash is going to be deducted. Well, how much do we have in liabilities? We have $75,000 in outstanding liabilities, which means we owe that money. So we're going to pay that money. So what happens to your cash when you make a payment? Well, your cash decreases, okay? So your cash is going to go down $75,000, okay? Your liabilities is also going to go down $75,000 because you're paying them off, okay? So your cash decreases $75,000, your liabilities decrease $75,000, okay? And those are the only accounts being affected. Now I'm going to get a balance after this particular transaction, okay? So I have $245,000, my balance after the sale, and I went ahead and I used $75,000 to pay my liabilities. So my balance for cash after this transaction is $170,000, okay? That one has been zeroed. Inventory has been zeroed, okay? Other assets has been zeroed. Now let's look at your liabilities. You had $75,000, you paid it off. So $75,000 and you paid it off. That gives you 0. So your liabilities are now closed. Okay, and we're just gonna bring in the balance because we didn't make any changes to our capital accounts. Okay, we're just gonna bring those numbers down. Okay, no adjustments were made. Okay, so this is requirement C right there. Okay. Now requirement D, the distribution of cash to the partners on April the 15th. Okay, so I have $170,000 in cash. I'm going to split that. I'm going to give that to my partners. Okay. So what's going to happen to your cash when you distribute to your partners? You're going to cut each of your partners a check. Your cash is going to decrease. And I'm distributing all of my cash at this point. I'm giving everything I have to my partners. So I've got $170,000 in my cash that I'm going to give over to my partners. Okay. So my partners, I'm liquidating their capital. Okay, so I'm going to close out their capital accounts because I'm paying them off. Okay, I'm liquidating their capital investment into the business. Okay. Okay. So at this point in time, I zeroed out my cash. I wrote a check to each of my partners and I said, you know what? You no longer have a capital balance in my books. Okay. I'm paying it off. You're being liquidated. Okay. So now I can get my ending balance. Okay. So your ending balance is going to be that balance after your liabilities. So you're going to get your balance after your liabilities and you're going to subtract the distribution of the partners. So you had 170, you distributed out 170, so cash is 0. Okay. Inventory had already been zeroed, other assets had been zeroed, liabilities had been zeroed. Now we're also zeroing out the capital. Okay. We had 30,000, we paid it out, that gives me 0. We had 50,000, we paid it out, now we have 0. We had 90,000, we paid it out, now we have 0. Okay, so at the end of the period, we have sold our non-cash assets, we have paid our liabilities, and whatever money we have left over, we distributed it to our 3 partners. Okay, and at the end, all of our accounts will be 0. Okay, so that is requirement number 1. Okay, then this is let me label this. This is requirement D right there. That way we have A, B, C, and D. Okay, so that is requirement 1 and each of the items under the requirement. Now they're asking you to journalize these 4 transactions in a general journal. Okay, so I've got a journal set up down here. Okay, we're going to go ahead and we're going to journalize. Okay, so the first entry that we had was where we sold the asset. Okay, we sold the asset for $230,000. Okay, so this happened on April the 1st. So I've got cash. How much cash did we obtain? We obtained $230,000. Let me just put commas here. We got $230,000. Okay, let me move this over. Okay, so we've got $230,000 in cash. Okay, we sold it for $230,000. Okay, and then what happened? We had a loss on sale of assets, and we calculated we had a loss of how much? We had a loss of $30,000. Remember, we had our other assets were $220,000 in our books, then $40,000 for the inventory. That was $260,000. We sold it for $230,000, so that means we had a loss of $30,000. Okay, so that $30,000 is a loss. I'm going to go ahead and I'm going to debit that. Okay, then we cleared out or we zeroed out our inventory. Okay, my inventory balance was $40,000, and then we also zeroed out our other assets account. And that other assets was $220,000. Okay, so here we have sale of assets. Okay, so that is the first entry we have. This is where we this is where they actually we actually sold the asset for a loss. Okay, so this is the sale of the asset. Now we also have to allocate that loss. Remember, we had that loss and we have to distribute it equally amongst our 3 partners. Okay, so we've got 10, 10, 10. Okay, so we have that. This is going on as of April the 1st. We don't have to put April, just the 1st right there. Okay, so the first thing we're going to do is we're going to put in the capital. Okay, I moved it over here. Let me just go back. Here we go. So I'm going to allocate the loss to each of the partners' capital accounts. So I've got C.W. Nelson Capital. They're going to get $10,000 loss. I've got J.R. Pope Capital. They got a $10,000 loss. And then I've got M.L. Williams Capital. And they got distributed 10,000. Okay, so initially we put our loss under the loss on sale of assets account, 30,000. I'm going to move it out from there into my 3 capital accounts, which is what I'm doing here. And now I'm going to clear out my loss on sale by crediting it. Okay, loss on sale of assets. I'm going to go ahead and I'm going to clear that debit. And how do you clear it? With the opposite, which is a credit. So at this point in time, my loss on sale of assets account has been zeroed. Okay, we've got a debit and we've got a credit. I went ahead and I allocated my loss to my 3 capital accounts, which is what we have here. And then I've got the cash that we received, and I cleared out my inventory and my other assets account. Okay, so here, this is my allocation of loss to partners. Okay. Next, we have where we paid our liabilities on April the 12th. Okay, so we paid our liabilities, and we paid our liabilities. I'm sorry. This should be letter C over here. This is where we paid our liabilities. Wrong line. Okay, right there. So we paid our liabilities of $75,000. Okay, we paid our liabilities of $75,000. That's what we had. So now we have to record that entry. That happened on the 12th. So what happened to my liabilities balance? My liabilities went down. Okay, I had liabilities. I had a credit of liabilities. If I want to zero out my liabilities, then I would have to debit my liabilities for $75,000. How do you pay your liabilities? You pay your liabilities with cash. So cash goes down, $75,000, and this is the payment of liabilities. Okay, so if we look at our liabilities balance, my liabilities balance was a credit. I need to zero that out. I debit my liabilities. How do I pay my liabilities? With cash. Cash decreases. Okay, so that takes care of that $75,000 entry right there for letter C. Okay, now letter D, the distribution of cash to the partners on April the 15th. Okay, so we're looking at this distribution where we have cash of $170, and we're going to split it over, or we're going to allocate it over to our 3 capital accounts for each of our partners. Okay, so this is happening as of the 15th. Okay, so C.W. Nelson, we have our first capital account, is going to get 30,000 right there, 30,000. Then we have J.R. Pope Capital. Pope got 50,000. And then we've got M.L. Williams Capital, and we have 90,000. Okay, we've got 90,000 for Williams, 90,000. Okay, so then what's happening to my cash? I am distributing my cash over to my partners. So cash decreases. When cash decreases, cash gets credited for the total of $170,000. Okay, this is the distribution of cash to partners. Okay, so that is what's going on in the 4th transaction. Okay, so you just need to be very comfortable and understanding what happened in each of those transactions, what accounts increase, what accounts decrease, so on and so forth. Okay, so this is the end of problem 1910. First, we have to prepare the statement of partnership liquidation. Make sure that we sell our assets, that we pay our liabilities, and then last but not least, we distribute the cash to our partners. Okay, once we have this completed, we can journalize the entries. Okay, so like I stated before, this is a very important problem. Let me just quickly check something for you guys. let me see. Why did I choose this problem? Let me see. Problem 1910. Yes, this problem 1910, you're going to have this on your test. So it's important that you understand how to do it. Okay, so the statement of partnership liquidation with a loss is going to be on your upcoming exam. So it is important. Okay, if you have any questions, concerns, please don't hesitate to contact me. Just make sure that you do utilize the resources available, which is to read the chapter, review the PowerPoints, listen to any videos embedded in Blackboard, and any videos embedded in the Cengage assignments, and then listen to any videos that I post on Blackboard. If after you do those 4 things, you have questions or concerns, you reach out to me. Okay, but it is important that you have read the chapter, because I'm going to start asking questions and I can tell if a student has read or not read. Okay, so it's super important that we don't skip that step. So that is basically it for this lecture. I want to wish you all a fabulous rest of your week, and until next time, take care. Bye-bye.